Well, the RBA has just made the announcement, rates have increased. Let's jump upstairs and run through the numbers. So the inflation rate hasn't really settled at the moment. There's still a bit of movement, and that's where the government's just trying to catch up, or the RBA is trying to catch up with these changes. So with the rising rates happening at the moment is causing a little bit of uncertainty. There's a bit more action in the market for refinancing, a few people trying to chase cheaper fixed rates or cheaper variable rates, even if it is quite a small difference. There's a bit more restriction on borrowing capacity. So the banks have increased the household expenditure measure level that they work, your borrowing capacity off. So they've increased that because cost of living is starting, to increase as well. And also interest rates, with increase in interest rates, so too does your borrowing capacity decrease. So these are the types of things that are impacting our clients at the moment. Now, property prices are still rising. Nationally, it increased by about 7 to 9%. Brisbane, especially, house prices have increased. There's 7 to 11% growth in 2026, and units are 7 to 8%. So I guess this is driven by higher population growth, limiting housing supply. So there's not much stock out there on the market at the moment. And then obviously this whole 2032 Olympic Games, and all the infrastructure that's coming into play in Brisbane. So last year we're going through the phase of, bridging loans and people buying and selling property. But now that the market is so competitive out there, clients are starting to come back and saying, hey, scrap the whole idea of doing an upgrade and doing a buy and sell. Now we're looking at doing construction again. So doing a knockdown, rebuild, or renovation, so that way they can hold on to their existing property rather than having to go out into the market and competing. I do see the market sort of slowing down a little bit because of what's happening overseas, and also with rising interest rates and petrol prices, cost of living. Normally what I find is it creates a bit of a bottleneck. So things start to slow down a little bit, and when the dust sort of settles and the rate does increase another 0.25, but clients figure out their budget and hopefully things overseas sort of calm down a little bit, then that's when things start to skyrocket again and the market starts to move really quickly. So I guess there's a bit of breathing space at the moment to play a bit of catch up while sort of people figure out, okay, what is our budget? What's going to happen when our fixed rates expire? What happens when our variable rate increases by 0.25, even potentially another 0.5? So there's a few more questions there. Looking at my notes, I guess the biggest issue at the moment is, supply shortage. So Australia now has 12.3 trillion housing market, but housing supply still can't keep up with the demand. So in Brisbane specifically, 16,000 homes needed annually and only 4,600 apartments expected per year. This shortage is a major reason for pricing increases. There's just so much demand out there. At the moment, there's no indication of, the market sort of crashing despite higher rates or changes to borrowing capacity. But the supply at the moment is not enough. And just talking to real estate agents out there, it's hard for them to get listings because, again, people don't want to sell and have to go out into the competitive market. A lot more people, especially in Brisbane, are starting to move to Brisbane. So they're not really moving out of Brisbane and moving down south. Brisbane has become the more popular sort of city. So that's where there's a lot more demand here. Look, there are changes to, interest rates, talks about further increases, borrowing capacity being impacted, all the things that are happening overseas. And on top of that, also a reform regarding capital gains tax, which has come into question, which a few investors are starting to worry about. We'll definitely have a video more about that, so keep an eye out for that video. Look, overall, the market is still moving. There's still people out there looking to buy a property because people at the end of the day need somewhere to live, and especially because of the supply shortage at the moment, there's still heaps of demand and still people you have to compete against to get into the market. Interest rates at the moment, variable rates are sort of sitting around the mid to high 5%. And fixed rates now have started to shift into the 6% mark. So you're starting to see that even the 1 to 5 year fixed rates are sitting anywhere between the low to mid 6%. To me, I guess that's where the bank's sort of foreseeing where the rates will land, anywhere within the 6% mark. So I guess we have to prepare for, these further rate increases. Look, hopefully there's nothing further than a 0.5% increase by the end of the year, and hopefully that is all we get to see. But at the end of the day, guys, if you do have any questions regarding your borrowing capacity, how it's been impacted, if you should fix in or just leave variable, please reach out and we'd be more than happy to help.